As mentioned, I am Marianne Young. I have had the pleasure of being the Senior Account Director at Lincoln Financial, who's been assigned to the County of San Diego program for the voluntary short-term disability and voluntary long-term disability for the last several years. It's that time of year again where we get to start thinking about employee benefits, your enrollment options, what coverages are going to be available for you in the new year, and what you want to elect to make sure that you have the proper coverage in the event that you need it in the next coming year. So Lincoln Financial Group, as I mentioned, has been a partner with the County of San Diego for several years now. We are going to be focusing on the disability products that we offer during today's webinar, and we are going to be talking about those benefits, what they provide, and how they can be used. So to start off, just to talk a little bit about the disability program. So this is a voluntary disability program, which means that it is paid for by employees through payroll deductions. And those are cash benefits that go directly to you in the event that you're unable to work due to an injury or an illness, maybe a surgery or childbirth. And this money, as I mentioned, is a cash benefit, so it will be paid directly to you as the employee and can help pay for any bills or expenses. And those can include just regular day-to-day bills like childcare or groceries, but it can also be used to help set off some of the costs and medical bills and things like that. So that money is made available to you in the event that you need it because you're unable to work due to your disability. So disability insurance is also known as income protection. So when you're unable to work, it's essentially ensuring your income to a certain amount during that time. So we have two different programs that run. One is made available to those employees who pay into the California State Disability Insurance Plan. So if you currently see on your paychecks that you contribute or have deductions that are paid out to the state of California for their state disability insurance, then you have one program that's available to you that includes one short-term disability option as well as a long-term disability option. However, if you are an employee at the county who does not pay into the California State Disability Insurance Plan, you have a couple of different options, and we'll be going through that for you as well. So for your options, if you do not pay into the California State Disability Insurance, you have three different short-term disability plans you can elect. All three of those plans do include a paid family leave component, which I'll go through in a bit more detail. And also to note, there is no LTD plan available to you through Lincoln if you are an employee who does not pay into the California State Disability Insurance. So first, we're going to go through to talk to the plan options for those employees who do pay into the California State Disability Insurance. So again, those of you who are currently or who in 2024 will be paying into the state's disability program through your payroll deductions, you have one STD plan option and one LTD plan option through Lincoln Financial. So to go through the short-term disability first, again, this is income protection in the event that you are unable to work due to a disability that is either caused by illness or injury. It could be a surgery or for childbirth. On the short-term disability plan for those who do pay into the California State Disability Insurance, you have a 14-day elimination period. That means for the first 14 days of your disability, you will not be receiving any benefit from Lincoln. That's called our elimination period. And during that time, you could use any sick leave or paid time off to ensure that you have some income during those first 14 days. But once your elimination period is met, your benefits will be payable. The benefit duration is up to 24 weeks, and that's the maximum that benefits will be paid out is if you're disabled for 24 weeks. But that doesn't mean you're automatically going to get benefits for those 24 weeks. It always depends on your medical situation and on the disability and recovery time as supported and certified by your doctor. That benefit is payable in addition to any payment you receive through the California California State Disability Insurance. And it's also an annual option to you. So when it says it's an annual guarantee issue, what that means is that you can sign up for it during the enrollment season each year without having to submit any medical documentation or medical underwriting to prove that you are in good health, but your benefit will be subject to a pre-existing condition. So what that means is that in the first 12 months of your benefits being eligible, if you submit a disability claim for something other than an injury that indicates that you may have had that condition before your effective date, for the few months before your effective date, that specific disability may be excluded. So as an example, if you have an illness, let's say you have to go out on disability because of a pneumonia, for example, and you're unable to work, you're going to be out. It looks like it's a pretty extreme case of pneumonia, but it shows that you had ongoing treatment for pneumonia for the same case of pneumonia prior to the effective date. That would be considered a pre-existing condition, and that specific disability would not be covered in the first 12 months of your enrollment. Another thing to keep in mind is that all premium is waived. So while you're out on a short-term disability, so you don't have to pay for the premium while you're out during your claim. The coverage is also portable, which means that if you were to leave employment at the County of San Diego, you could port that short-term disability plan and take it with you. And then also, you don't have to be fully disabled in order to return, you don't need to be fully recovered to return to work. If you can return to work on a part-time basis, there could also be a partial cash benefit paid out to you. That's for a partial disability in the event that you want to return to work. Another couple of items to keep in mind, this is a employee paid benefit. So it's typically the rates, the premium rates for a group short-term disability plan through your employer is often much less expensive than it would be if you were to be trying to research and find a plan like this on your own as an individual consumer. It's simple payroll tax deductions that are taken after tax, and it helps just to really streamline that claims process for you here at Lincoln. Again, it's an income replacement plan. It's a 14-day elimination period, so you would begin collecting benefit payments on day 15. The benefit amount is 25% of your weekly earnings, up to a maximum benefit of $1,000 a week. Also keep in mind that's in addition to any state disability insurance benefits that you would be receiving through California. The maximum benefit duration is up to 24 weeks. And again, this is dependent on the medical information that's provided and supported by your doctor. And as I mentioned before, that pre-existing condition exclusion does include a 3-month look back. So if you have a claim that's submitted in your first 12 months after enrolling for your first time after the eligibility period, or I'm sorry, the eligibility effective date of January 1, the case manager may do some additional research to see if there was any medical attention or anything like that that was covered the 3 months prior to the effective date. So 3 months prior to January 1. Okay, I'm going to stop there. I just want to check to see if there are any questions about that particular short-term disability plan for those employees who pay into the California State Disability Insurance. Are there any questions in the chat?
No questions at this time.
Thanks for confirming, Melissa. I'll go ahead and move on to LTD. So again, this is the long-term disability income protection for those employees who elect it, and it is available to those who are eligible for that 24-week short-term duration that we just discussed. So this group of employees, again, who don't pay into the California State Disability Insurance, do have a voluntary LTD offering available to you through Lincoln. It has a 180-day elimination period, so it's available to you after you have been disabled for 180 days or 6 months before the cash benefits begin to pay out. These are a monthly benefit. We pay up to 60% of monthly earnings, not to exceed $5,000. The monthly, $5,000 a month. The maximum benefit duration, so the longest a person would continue to receive these benefits, if it's medically supported, would be either to their Social Security normal retirement age or to the age 65, whichever is later. Again, premiums that are taken from paychecks are taken after tax. There is a pre-existing condition exclusion for this benefit as well. For long-term disability, there's a 6-month look back for any disabilities that begin in the first 12 months of your original effective date. So if you've already had this coverage and have been with Lincoln's LTD plan already and plan to continue that, you have already met that pre-existing condition exclusion period. So this wouldn't apply to you, but for anyone who's interested as a new enrollee for the voluntary LTD, just keep in mind there is that pre-existing condition look back. So any of those illnesses or injuries that maybe occurred prior to the effective date of January 1 would not be, if they were, if you received any care for those 6 months prior to January 1, they may not be covered in the first 12 months of your effective coverage. There is a couple of limitations on different types of disabilities. So for mental, nervous, and substance use, there is a 24-month duration maximum, as well as a 24-month ONOC period, and that's related to the definition of disability. So if you're able to, let's say for the first 24 months, unable to do your particular job, that your normal duties, but you're able to do another job, then that after 24 months, we would be looking to see what other job you could possibly be able to do. We also have a reasonable accommodation, survivor income benefit, and as I mentioned before, that waiver of premium is included. So once your long-term disability benefit kicks in and you're out on a claim, you no longer will need to pay for that LTD premium. So again, I'm going to pause there. And this is the only time we're going to be talking about the long-term disability plan through Lincoln. So I want to see if there are any questions in the chat that we can address before I move on.
Yeah, it looks like we have one question, Marianne. The question is, if someone retires with a non-work related disability, does this LTD policy pay on top of or in addition to the pension?
Yeah, so for the long-term disability, I believe there is a pension clause in this program where the pension payment does not offset the long-term disability payment. That would be in the policy document. And I could follow up just to confirm that because I'm going off memory and I want to make sure that I'm giving the right information. But I do believe that the pension is not excluded for this benefit.
Perfect. We can take this as a takeaway as well.
Thank you, Melissa. Any other questions?
Doesn't look like it.
Great, thank you. All right. So now I'm going to switch gears a little bit and talk to the benefit programs that are available to those employees who do not pay into the California State Disability Insurance Plan. So again, for these folks, there are 3 different short-term disability plan options. They all 3 include a paid family leave component to those coverages. However, there is no LTD plan available through Lincoln Financial. So we're going to switch gears and focus just on the programs of the 3 short-term disability programs that are available to those employees who do not pay into the California State Disability Insurance. So here, again, it is a voluntary benefit. So premiums are paid at a group rate and through payroll deductions. After taxes are taken, then the payroll deductions are applied. Group rates are typically much less expensive than individual consumers would find in the marketplace. For this program, regardless of the 3 options, all 3 of them have a 7-day elimination period for illness and injury. So what that means is you have to be disabled for at least 7 days before any benefits are payable through the short-term disability plan. Now, there are 3 different plan options to select from, and they are all related to the maximum duration period that's available. So one of those options is a 3-week max duration. The other is a 7-week max duration, and the last one is a 12-week max duration. Now, keep in mind, just because you might elect the 12-week maximum duration doesn't automatically mean you're going to get those 12 weeks. All disability claims are reviewed and the length of them are determined based on the medical situation and the medical documentation provided. The 3, 7, and 12 are actually just the maximum durations available based on your, based on your election. Again, this short-term disability is portable, meaning you can take that with you should you leave employment at the county. It's an annual guarantee issue, so there is no medical underwriting requirements or approval needed to enroll. However, there is a pre-existing condition exclusion similar to what I've spoken to before. Premium waiver applies. There is a partial disability component if you're able to return to work part-time while you're disabled. And for this particular benefit, there's also that paid family leave benefit that's included with any of those 3 short-term disability plans elected. So just to kind of recap again what this benefit looks like from a short-term disability perspective, it is an income replacement for any non-work related illness or injury that makes it impossible for someone to work. There's a 7-day elimination period, 60% benefit up to a maximum benefit of $1,620 a week. So that mirrors the state plan. It's currently $1,620 a week, but it does change every year. It typically increases. So that may be slightly higher come January 1, and we will have that finalized in December. That's when the state typically releases that information. Again, the maximum benefit duration you can choose is either a 3-week, 7-week, or 12 weeks maximum duration. That pre-existing condition exclusion does apply. So this is for disabilities will have that 3-month look back. If you are a newly enrolled person effective January 1 for this program, anyone who is pregnant prior to that effective date of January 1, whether you're pregnant or if you're, like I said, have any other kind of medical condition, that specific disability may not be covered due to a pre-existing condition. And then again, paid family leave or PFL, that's available for all employees who enroll in this one of these 3 short-term disability plans. And this is, although not a disability benefit, it does provide additional cash benefits. If you as an employee need to take time off to care for a family member or bond with a new child or due to a military extension leave, it cannot be used. That paid family leave cannot be used for your own medical condition. So I'm going to stop again, see if there's any questions in the chat about the 3 STD plan options before I go a little bit deeper on the paid family leave.
Don't see any questions regarding the paid family leave. I do see a note. Someone had missed the first few minutes of the presentation, which we will go over the presentation again if you want to hang out a little bit. But the question here is the money that we pay into the policy, do we have to use it by the end of the calendar year, or does it stay in the account policy until you need to use it? I guess I'm not entirely sure what that is referring to.
Right. So it sounds like a little bit different. So unlike, let's say, a health savings account or something along those lines where the money is put into an account. Essentially, your premiums that you're paying for these benefits are, as long as you're paying those premiums, then you have the coverage. So it's similar to like auto insurance, you pay for it. And as long as you're paying those premiums, you have that coverage. But if you aren't paying for those coverages, then those benefits are no longer available to you. Hopefully that helps, but Melissa, maybe you could keep an eye on to see if there's a follow-up question on that one.
Yeah, it looks like they were referring to the health savings account. So that would not be reviewed in this presentation.
Correct.
Yes.
Okay, I'll go ahead and move on then with the paid family leave component of the 3 short-term disability plan options that are available to employees who do not pay into the California State Disability Insurance Plan. So just want to confirm or reiterate, this is only available to those who do not pay into the California State Disability Insurance Plan. And in order to be eligible for the PFL, or in order to have the PFL, you have to elect one of the 3 short-term disability plans. This paid family leave is not available to those who do pay into the California State Disability Insurance Plan because the state offers their own PFL program. All right. So paid family leave, again, this is linked to one of those 3 short-term disability plans, either the 3-week, 7-week, or 12-week. The paid family leave is also a cash benefit, but it's paid out in order for you to care for a family member or bond with a new child or for a qualifying exigency related leave for a family member who's in active duty. So the different things to keep in mind, it's not a disability benefit. So this isn't paid out to care for you if you're disabled. It has nothing to do with your own disability or your own medical condition. There is no elimination period. So if you need to go out on a leave to care for a family member, for example, that cash benefit is payable to you on day 1. The maximum duration of these benefits, regardless of which short-term disability plan you elect, is 8 weeks per 12-month period. Those 8 weeks can be taken continuously, so one chunk all at once, or it could be taken intermittently. So if you're taking time off, let's say to care for a a family member and you only need to take 1 week off a month for, let's say, 4 months, then you could take those 4 weeks off over that course of 4 months, so 1 week per month, and then you would still have 4 weeks available to you if a different paid family leave event occurs later in the year, or if those 4 visits get extended, and let's say after 4 months you have to do another 4 months of 1 week per month, you could do it that way. So different options there, some flexibility around how those 8 weeks can be used, whether continuously or intermittent. And there's no pre-existing condition exclusion on the paid family leave, the PFL. So we'll go into that in a little bit more detail further on in the presentation, but just wanting to clarify, because I know I mentioned that under the disability, but under the paid family leave, there is no pre-existing condition. So the different conditions that you can take time off for is when related to a family member, and on the right there, it indicates your family member includes, a qualified family member includes a child, parent, parent-in-law, grandparent, sibling, spouse, or a registered domestic partner. And you can take time off to care for a seriously ill family member, or if you're bonding with a newborn child or an adopted or foster child, or again, if you have a family member who's, and you're needing to take a military exigency leave for that family member, that 8 weeks could be used for those type of leaves as well. So our paid family leave offered through the county that Lincoln administers really mirrors the state's calculations when they're coming up with benefit amounts for the paid family leave. So currently that maximum weekly benefit is $1,620. So it's payable at 60% of your weekly earnings at $1,620. And it's based off your average weekly earnings. So there's kind of a complex calculation that's the state uses, and I did include a link to that calculator so you could go through that if you wanted to, but just wanting to show you that it could differ just based on what that weekly average earnings are. So it's not necessarily taking a look at your current earnings when you go out, it's looking at that average. So 1,620 is the weekly maximum currently, but it may go up in 2024. And again, that will be documented in December when that information is released. I think I mentioned this already, but just wanting to highlight a couple of items. One is that your benefits begin first day of leave, so there's no elimination period. It is a maximum duration of 8 weeks. Some things to keep in mind, the qualifying event, meaning so if you are bonding with a new child that you've adopted, let's say, that adoption date needs to be on or after your coverage effective date. So if you're going to be a new enrollee on January 1, but you adopted a new child on October 1st, that particular adoption wouldn't be covered until because of the qualifying event occurring before your coverage effective date. However, if you have been enrolled in this plan and continue it on January 1, then you would have already had that coverage. Your original effective date would have been, last year or when you were first hired. Another thing to keep in mind is that while you are out on these leaves, you can also utilize some accrued leave benefits such as PTO or vacation, but your coverage or but your benefit amount plus that accrued benefit cannot exceed 100% of your average weekly wage. So that's something that's managed, like if you wanted to use vacation time or PTO time while you're out on a leave, you can. However, you will not be allowed to exceed more than 100% of your weekly wage. Wanting to go through a little bit of kind of the claims process. I know this is a busy slide, so I'll just talk through it. Again, this is for those employees who are able to elect either the 3-week, 7-week, or 12-week short-term disability plan, the duration plan for those plans. And whether you were calling to file a claim and a leave or a claim or a leave, all you have to do is call Lincoln on the county's intake line and get that leave started. You only have to do it once. You don't have to do it multiple times. So if you're going out for a pregnancy and you know you're going to take some bonding time, you can just file that all as one event or claim, and the folks at Lincoln will help talk through that. So you'll first talk with an intake person who will get some information from you over the phone. And also send out some additional documentation to you. Then a case manager at Lincoln will be assigned to your claim or leave, and that would be your single point of contact throughout the course of your claim and or leave. That case manager will be talking with you, helping answer any questions, making sure that you're getting all of the information you need. If there's any questions for the doctor, or maybe if we're having a hard time getting a hold of the doctor, that case manager would work with you as the claimant, and also try to proactively work with your physician as well. The case manager updates all of the claim systems and provides notifications about your claim status. So you get information about the status of your claim or leave, as well as the county. So everyone's informed of what's going on with that absence. And then for the return to work process, the case manager works really closely with you as the claimant to make sure that everybody is aware of your return to work plan and that the return to work date is confirmed by you and your doctor to make sure that everything is going as expected throughout the recovery. So that's sort of regardless. This is the same process for all short-term disability claims, but also wanting to indicate that if you're submitting for a leave as well, you would go through this same process. So you don't have to do anything different just because you're getting a leave component on your plan. So here's an example of what a paid family leave could look like for those who enroll in that 3-week, 7-week, or 12-week max duration short-term disability plan. So as I mentioned, there's an 8-week maximum within 12 months, and that could be used for one event or multiple qualifying events. It could be used continuously or intermittently, as long as that qualifying event occurs on or after your initial coverage effective date. So here we see to care for a family member, for example, those 8 weeks are available to you starting on day 1. So at no point do you have to break it up. If you want to take it all at once, that's no problem, as long as there's that medical support that indicates that's what's needed to care for that family member. Now, because it's a little bit different, I want to make sure that I'm addressing pregnancy claims and bonding leaves, because this is probably the only time when an employee would be submitting both a short-term disability claim with a coinciding, or not coinciding, but with a paid family leave as well. So the pregnancy claim and bonding leaves, these typically go hand in hand. More often than not, a bonding leave begins as soon as that pregnancy claim for short-term disability ends. Now, that's not required. As I mentioned, that bonding leave can be taken at any point after that pregnancy claim ends. It doesn't have to be right away, but most folks take that time back to back. So when an employee goes out for a short-term disability claim due to their pregnancy, the claim specialist during that time will kind of, ask those questions on whether the employee intends to use their bonding time immediately or if they want to do it a little bit later. If they do intend to use it immediately, then the case manager will just go ahead and set up that PFL bonding claim or bonding leave as soon as that short-term disability claim ends and no further actions needed. But in the event that, let's say, the employee wants to do some intermittent bonding, so maybe they only want to take 2 weeks right away and they want to take the remaining 6 weeks after a couple of months, that's totally possible too. So intermittent bonding can also be applied if the employee decides to do that as well. They just need to let their case manager know what their plan is. So just a quick reminder, and again, I know this could be a little bit confusing when it comes to pregnancy claims, but for pregnancy, and this is especially if you are a new enrollee effective January 1, 2024, a pregnancy, if you're pregnant before that effective date, may be considered pre-existing for your short-term disability, and may not be covered for short-term disability if you become pregnant prior to your initial effective date. However, there is no pre-existing condition limit on your paid family leave. So you would still be eligible for your paid family leave even if you're pregnant prior to January 1. So I just want to say that I'm going to not beat a dead horse on that one, but in case there's any questions, I just want to make sure everybody understands that that one can be a little bit confusing when it comes to pregnancy and pre-existing and how PFL works. So the PFL, just to reiterate, will be available for the bonding portion of the absence, but the short-term disability portion for the pregnancy may be excluded if that's due to a pre-existing condition. I also have a couple of different examples that I'm going to go through for pregnancy claims and how they would be applied depending on which STD plan maximum you select. So the first example here is for the 3-week short-term disability plan. So keep in mind, for the 3-week short-term disability plan, the first week is an unpaid elimination period, and then benefits would be payable after that, regardless of the delivery type, whether there's any complications, anything like that. It's a 3-week maximum duration. So as soon as that disability ends, you would be eligible to start your bonding leave. That was 8-week bonding leave for the 3-week duration. Now for the 7-week duration, this one gets a little bit confusing because although you have although you have a 7-week maximum duration under the short-term disability plan, most normal recoveries for a typical delivery is only a 6-week recovery time. So even though you have a 7-week max duration, typically for a normal delivery, a vaginal delivery, the recovery time is 6 weeks if there are no complications. So in this instance, the disability would only be 6 weeks. And the first week would be unpaid due to the elimination period. So even though you have a 7-week max duration, benefits would not be paid out after that 6th week, unless, again, there's complications or if there was a C-section delivery. So for normal vaginal deliveries without complications, recovery time is typically 6 weeks. And for C-section deliveries, the typical recovery time is 8 weeks. So for a normal delivery, benefits wouldn't be paid out after 6 weeks. or week 6, excuse me. And for a C-section delivery, benefits wouldn't be paid out after 7 weeks because then you've reached your plan max duration. Again, I know this could be a little bit confusing, so I wanted to just kind of make sure we're slowing down a little bit to go over some of these examples, and I can open it up for some questions when we wrap up the next example. But in all of these examples for pregnancy, the bonding leave for the PFL is always at 8 weeks are available. So regardless of the 3, 7, or 12 short-term disability plan duration, those 8 weeks are always available once that disability ends. So now we have that 12-week example, max duration. So as I mentioned before, even though an employee may elect 12 weeks for the short-term disability, that doesn't mean they're automatically going to get those 12 weeks if they go out for a pregnancy claim. So as I mentioned before, a normal delivery is a 6-week recovery period. C-section is 8 weeks. So we will see in this scenario for 12 weeks that benefits would not be paid out after 6 weeks for a vaginal delivery. And it would not be paid out beyond 8 weeks for a C-section. So they would get payment for 7 weeks because that first week is that unpaid elimination period, and then they would get paid the remaining 7. So just keep in mind, we're looking at the total number of weeks. That max duration is based on the total number of weeks of the disability, not the total number of weeks of payment. And that 8 weeks, again, for the paid family leave is still available once the disability claim ends. I know that got confusing. If I need to go back to any of those slides, let me know. Again, I'm going to pause here and see what questions there are around the paid family leave.
Real quick, Marianne, we do have 3 questions that came into the chat. First one was, if surgery is needed for a work-related injury, will these plans pay out benefits for the duration of the surgery and recovery? I have been a member for years and it is very difficult to get the claims approved. And I know we explained the claims process, but if maybe this person has additional questions on that process. And then they also mentioned they pay for the California SDI.
Sure. So for the California SDI, one thing to keep in mind, if it's a work-related injury, those are typically excluded from short-term disability plans, whether through the state or through Lincoln, because they are work-related and covered by workers' comp claims. So typically for work-related claims, those are not necessarily covered under the short-term disability plan. But they should be covered under workers' comp. If for some reason that workers' comp claim is denied, then that should be considered, and that denial should be provided to the Lincoln case manager so that we could go ahead and look at that claim as a non-work related claim. So if workers' comp denies it, we will consider it a non-work related claim or injury. Was there another part of that question that still needs answering?
I'll wait to see if we get any more feedback from this person.
Okay.
But our next question here reads, does your coverage effective date change if you switch durations of your STD plan, i.e., if you switch from a 3-week to a 7-week plan?
No, it does not.
Awesome.
It stays to your original effective date.
Perfect. And then our last question here is confirming this is separate from STD. So if you personally needed STD but then needed PFL, that would be separate.
I'm not sure I'm understanding that question. Can you repeat it one more time?
Yeah, it's I feel like I'm a little bit confused on it too, but I am assuming this is when we were going through the STD. They're just wanting to confirm that hold on, we got some feedback here. I'm sorry, this is for a separate question. So it reads, confirming this is separate STD. So if you personally needed STD but then needed paid family leave, that would be separate. So I'm assuming they're asking if this paid family leave would be separate from the STD.
So if it's assuming, okay, let me make sure I'm answering this question thoroughly. So you cannot elect the paid family leave separate from the short-term disability. So the paid family leave benefit is not a standalone benefit. It must be it can only be available if electing a short-term disability plan. Now, in the event of a claim, if someone goes out on short-term disability, let's say for knee surgery, and then in a couple of months, they have a newborn child and want to take time off for bonding, they could take that short-term disability off for knee surgery and then later still have that paid family leave, the full 8 weeks available to them for bonding, because that would be their first time taking it. So they don't have to take it with the short-term disability. They could take it at any time for a covered event. So that could be, again, bonding, caring for a family member, or a military exigency leave. I'm not sure if that answered the question. I'm hoping I understood it correctly.
We just had, oh, that looks like that was answered correctly. Awesome. Thank you for the feedback. And then we have another question here. When it comes to pre-existing conditions and coverage effective date, if we already have coverage for STD through Lincoln and we continue our coverage into 2024, is our coverage effective 1/1/2024 or the original date from where we first signed up?
The original date from when you first signed up. Yep, we don't restart the effective dates every year if you're continuing your coverage from year to year.
Okay, that was the end of the questions in our chat. Unless anybody wanted to ask any questions, feel free to take yourself off mute.
And we can open up for all questions. It doesn't have to just be paid family leave. So any general questions? Okay. Well, if there are no general questions, I think that we could go ahead and wrap up for now for our first round of this presentation. I just want to thank you. If any additional questions come up, please let me know or let the team know as they tend to reach out to me throughout this period between now and when open enrollment ends. We will be starting this presentation again in a few minutes. So if anybody missed the very beginning, we can go through it from the beginning. Nidra, are you okay if we start in about 2 minutes?
Absolutely. Thank you, Marianne. Marianne, I believe we have a clarification question that just came up in the chat regarding workers' comp and if injury is no longer covered.
Sure, can you confirm the question?
Sure. Sounds like injury is no longer covered via workers' comp. Will plans cover? Martha, can you add some additional content for your question so we can hopefully answer it correctly?
Um, So I just want to point out a couple of items. One thing is that for workers' comp, typically, so a couple things. So workers' comp not only typically will pay for time missed due to a work-related injury, but it would also pay for the medical expense, could pay for the medical expenses related to that injury as well. So one big difference between workers' comp and the short-term disability is is regarding that time off. So, for example, if if it's a non-work related disability, Lincoln's going to pay for that income protection while you're unable to work, but they're not going to be paying specifically for the medical expenses that may incur. So, if there was a surgery, things like that. But if it is a surgery that's needed due to a workers' comp claim and workers' comp denies it, then that claim should be submitted to Lincoln. And because if workers' comp is denying it, then Lincoln would not consider that a work-related claim. So it's essentially that decision by the workers' comp administrator is used as proxy to determine whether it's a work-related claim or not, or a work-related disability, excuse me. So I know that sounds a little convoluted, and it just may need to be, looked at on an individual basis. So I always recommend in a situation where a claim's not being covered by workers' comp, or that time off needed for isn't being covered by workers' comp, that it be go ahead and submit it to Lincoln for the case manager and our clinical team to review, determine that. So it's a little difficult for me to speak to what should happen in every scenario. But I just encourage anyone who finds themselves where the workers' comp isn't paying for their time off to go ahead and submit that claim to Lincoln. Hopefully that helps. Are there any other questions related to the presentation that I've just completed before I restart at the beginning? All right. Well, I will go ahead and restart at the beginning. Again, I know that there were some folks who missed the very beginning of our presentation. So if there's anybody who was here for the whole thing and wants to drop off because you don't want to hear a repeat of everything, then that's totally fine. Otherwise, I will go ahead and share my screen again and start from the top. All right. Hello, everyone. My name is Marianne Young. I'm the Senior Account Director here at Lincoln Financial. I'm here today to talk about your voluntary short-term disability and long-term disability that's available through the County of San Diego when enrolling for your 2024 benefits. There is nothing new being introduced this year for your voluntary STD and voluntary long-term disability. So if this is something you are familiar with, it should all sound like something you already know. So just wanting to let you know that both of the short-term disability and long-term disability plans that we're going to be talking about today are to help with income protection. So in the event that you are disabled and unable to work due to your own illness or injury, surgery, or pregnancy, we would then be able to provide some additional benefits to you, cash benefits to help during that time. They are voluntary benefits. So what that means is that they are paid by the employees through payroll deductions. But because it's a group benefit, you're paying some of the least expensive rates that are out there, especially when taking a look at comparing programs through as an individual consumer and getting an individual policy. So a disability program, as I mentioned, are cash benefits to help you recover and you're unable to work due to an injury, illness, surgery, or childbirth. And they're cash benefits that you can use for any of expenses that you have or bills that you need to take care of while you're unable to work. So that could be day-to-day things like groceries and childcare, or it could be, to help with those medical bills, things like that. So you use that money for what you need it for. It's going directly to you, and you can use it as needed. So Lincoln administers two different disability program options. One is for those employees who pay into the California State Disability Insurance Plan. And you have one short-term disability option and one long-term disability option. And then the other group of employees who do not pay into the California State Disability Insurance Plan, you have three short-term disability plan options to choose from. All including a paid family leave component. However, there is no long-term disability plan option through Lincoln Financial for those employees who do not pay into the California State Disability Plan. To keep it simple, we're going to go through each program individually. So for those employees who do pay into the California State Disability Insurance Plan, you have one short-term disability plan option and one LTD plan option through Lincoln. And we're going to review those right now. So your short-term disability, it is one plan option available to you if you are paying into the California State Disability Insurance. And there is a 14-day elimination period for this benefit. So that means while you're disabled, there will be no benefits paid for the first 14 days from Lincoln. Your maximum duration for those benefits is 24 weeks. So as long as your claim is medically supported, your benefits will continue to be payable through the 24th week of your disability. That benefit that you do receive is in addition to your California State Disability Insurance. It's an annual guarantee issue, so that means each year you can enroll without having to submit any health questionnaires or medical underwriting for approval to enroll in the program. However, a pre-existing condition exclusion will apply if you have a pre-existing medical condition that you were trying to go out on a claim for. Premium is waived during the time that you're out on a short-term disability claim, and the coverage is portable. So that means if you were to leave employment with the County of San Diego, you can take that coverage with you after you leave the county. And then in the event that you are out on a short-term disability and want to return back to work, but can only do so on a part-time basis due to your disability, you can get a partial cash benefit, and that's what we call a partial disability benefit during that time while you're continuing to recover. As I mentioned, it is a group rates through County of San Diego, so that's often much less expensive than what you would see if you were to look at the individual policy market. All premiums are deducted from your payroll on a post-tax basis. And then all of the claims are administered by Lincoln Financial, and we'll go into a little bit more details about that. So your income for replacement, again, this is for non-work related illnesses or injury. This is if you're unable to work due to those injuries or illness, and while you're recovering, there's that 14-day elimination period. So benefits begin on day 15. Your benefit is 25% of your weekly earnings, up to a maximum benefit of $1,000 a week. Again, this is on top of any benefit you get through the state. Your maximum benefit duration is up to 24 weeks. And this is based on the medical information and documentation that we have certifying your claim. And there is that pre-existing condition exclusion. So there's a 3-month look back for any disability that you may claim that you may submit in the first year. So if it looks like that it's possible, the first year of being enrolled in this particular coverage. So if it looks like it's possible that it may be due to a pre-existing condition, we'll do a 3-month look back to see and review any medical records for the 3 months prior to your initial effective date. So this pre-existing condition will really only apply to any new enrollees who were enrolling in that short-term disability benefit for the first time for January 1. Gonna pause there, see if there's any questions about the short-term disability plan for the employees who pay into the California State Disability Insurance before I move on to the LTD plan.
We do have a question in the chat. It reads, how long does it take for the paperwork to be processed and the payments to start for these benefits?
So a lot of that really just depends typically, and I do have a process slide coming up a little bit later in the presentation, but normally we are able to get most claims processed within 10 days of submission. I would say we're typically seeing over 85% of our claims being completed within that first 10 days, but there's a couple of things that would depend. One is the date of disability. So let's say it's an early submission. I'm submitting my claim information now for a surgery that I have scheduled on October 2nd. My claim will not be approved necessarily before October 2nd. I have to wait until that actual surgery date is completed, or if I'm, have a expected delivery date, anything like that for a pregnancy claim, it will not be approved in advance of that delivery date or surgery date. And we're also waiting on the medical documentation from the doctor. So that's another thing that typically can cause some delay, but if the doctor is able to confirm the disability in a timely manner, we're seeing that most claims are being approved within 10 days. Are there any other questions?
We had one just come through. I believe they're asking if plastic surgery applies to SDI unless it's not medically necessary.
It would depend on the reason for the plastic surgery. And I can't speak to the SDI program. For short-term disability, it would depend on if it's solely cosmetic. Anything else?
No other questions in the chat at this time.
Thank you. All right, moving on to the LTD program. So again, this is for those employees who are eligible for that 24-week short-term disability duration. So those who pay into the California short-term disability, California state disability insurance, excuse me. So for the long-term disability, this is a elimination period of 180 days. So for long-term disability, you need to be disabled for a much longer period. So 6 months or longer to be eligible for this LTD. And then once approved, the cash benefits are payable. It's 60% of earnings up to a monthly maximum of $5,000. The maximum benefit duration, so as long as the claim is medically supported, it will continue to be paid to either age 65 or your Social Security normal retirement age. Again, all premiums for this voluntary LTD plan is taken through payroll deductions and are post-tax. There is a 6-month look back on pre-existing conditions for the LTD claims. There are some limits on benefit duration periods for certain types of disabilities, and that includes medical nervous claims as well as substance use claims. There's an ONOC definition of disability for 24 months. So what that means is after 24 months of being disabled on long-term disability, we then would reevaluate your claim to determine if you were disabled from any occupation after that. And then the LTD includes reasonable accommodations, survivor income benefit, and again, waiver of premium similar to what I spoke to before regarding the short-term disability. So that was the only long-term disability plan option that I was going to speak to today. Were there any questions about that before I start talking about the benefits available to those employees who do not pay into the California SDI plan?
We just had a question come through. If someone can't do their own occupation after 24 months, are any occupations similar to the original job?
Yeah, they would look to see, it may not be similar, and it always depends on the situation. So that's something that the case manager would look at. They would want to find something comparable. You know, for example, comparable in like earnings and things like that.
She added, if this alternate job pays less, is there a supplemental from LTD to make up the difference?
That I can't speak to. It would need to be discussed with the case manager for those specific situations.
Awesome. I don't think there's any additional questions as of this time.
Thank you. So moving on, for employees who do not pay into the California State Disability Insurance Plan, you have 3 short-term disability plan options that we're going to be discussing. And all of them include a paid family leave component. However, there is no LTD plan available through Lincoln Financial. So taking a look at the 3 short-term disability plans first, all 3 of them have a 7-day elimination period. So for those first 7 days of your disability, you will not be receiving any payment through the benefit. You can, though, however, use any kind of paid time off or sick leave during those 7 days to make sure that you have some income coming in. And then the benefits payable after your 7-day elimination period is met. Regardless, and that's regardless of the benefit duration. So you have 3 different options, and all 3 options, the difference between them are the maximum duration of your short-term disability plan. So your first option is 3 weeks, your second is a 7-week maximum, and your last one is a 12-week maximum. Again, regardless of which of those plans that you elect, your claim will only be paid out through the time frame that's medically supported. So just because you enroll in that 12-week maximum benefit duration doesn't automatically mean you're going to get 12 weeks when you go out on a short-term disability. All 3 of the short-term disability policy or options are portable, so you can take it with you if you were to leave County of San Diego. You have an annual guarantee issue open enrollment, so you can enroll in these coverages each year without having to submit a health questionnaire or get medical underwriting approval. However, a pre-existing condition exclusion does apply. Premiums are waived while you're out on that disability for that benefit. Also, if you are able to return to work on a part-time basis, you can qualify for partial disability. And for all 3 benefit options, a paid family leave benefit is included, which we'll go through in just a few minutes. A slightly deeper dive about your short-term disability options. Again, it's an income replacement benefit for non-work related illnesses or injuries. There's a 7-day elimination period. The benefit payment is 60% of your earnings up to a maximum of $1,620 a week. That may be adjusted at the beginning of the year because the plan maximum always mirrors the state, and they typically increase that year over year. So that may go up in January, but we won't know what the amount will be until later in the year. Your maximum benefit durations, again, these are your 3 options: 3 weeks, 7 weeks, or 12 weeks. There is a, there is a pre-existing condition exclusion. So there's a 3-month look back for anyone who submits a claim within their first 12 months of their initial effective date. So this only applies to those who are newly enrolled and was not enrolled in a short-term disability plan with Lincoln prior to January 1. One thing to keep in mind, if a participant does become pregnant prior to the effective date, that pregnancy may be considered a pre-existing condition and not covered through the short-term disability program. And we'll go through a little bit more detail on that as well. And then paid family leave. So this provides a cash benefit when a participant needs to care for a seriously ill family member, for bonding with a new child, or for a military exigency leave. It cannot be used, the paid family leave. It's not a disability benefit, so it cannot be used for an employee's own condition. So the short-term disability can be used for your own condition, but the paid family leave component cannot. I'm going to stop there. Before I dive deeper with the paid family leave, I want to see if there are any questions about the 3 short-term disability plan options that we just discussed for those employees who do not pay into the California State Disability Insurance Plan. No questions? Crystal, are we good to continue?
Oh, sorry about that. I was on mute. No additional questions at this time.
Thank you. All right, just to reiterate, the PFL program is not available to any employees who pay into the California State Disability Insurance. It's only available to those employees who do not pay into the California State Disability Insurance and who also elect one of the 3 short-term disability plan options. So you cannot get paid family leave as a standalone. It has to be, it can only be available when electing one of those 3 short-term disability plan options that are available to those employees who do not pay into the California State Disability Insurance. So for paid family leave, again, this is available to anyone who elects those 3 short-term disability plan options. It is a cash benefit that's paid out to an employee when they need to take time off to care for a seriously ill family member, bond with a new child, or for military exigency. Couple of things to keep in mind. This is not a disability benefit. You cannot use it for your own medical condition. But you can use it, like I said, for any of those covered conditions. So to take care of a family member, bond with a new child, or military exigency. And the covered family members are listed there on the right. So that could be child, parent, parent-in-law, grandparent, sibling, spouse, domestic partner, etc. Couple of key things to keep in mind about the PFL is that there is no elimination period. Benefits begin the first day of leave. The maximum benefit duration is 8 weeks per 12 months. Those 8 weeks can be taken continuously or on an intermittent basis. And there's no pre-existing condition exclusion applicable to the PFL. So I have a couple of more slides, and then we could go into a couple of examples. So the benefit payment for paid family leave is 60% of your average weekly earnings with a maximum of 1,620 per week. Again, this mirrors the state calculations, and we have the state calculator there. So the benefit may increase in 2024. That typically increases year over year. But we don't know what it is until like December. So currently that maximum is 1,620 for your weekly maximum of PFL benefit. Again, the benefit begins on your first day of leave, and there is an 8-week duration per every 12 months. And during those 8 weeks, you can also leverage any accrued leave benefits and combine that with your PFL benefits. So accrued leave benefits that you may be available to you through the County of San Diego, those can be combined with your PFL benefits. However, your total payments cannot exceed 100% of your average weekly wage. So just to keep that in mind, although you can combine them, you can never get more than 100%. And for your PFL, the qualifying event must occur on or after your initial coverage effective date. So if you are already enrolled in the one of these short-term disability plans and have PFL available to you today, and you plan on continuing that coverage in January for 2024, then any events will be covered. Any of those events will be covered. However, if you are not currently enrolled and you plan on enrolling for the first time in January, then any qualifying events must occur on or after January 1. So if, for example, you are looking to bond with a new child, that new child's delivery date or adoption date needs to be on or after January 1 in order to be able to use the PFL in 2024. This is the claims process. This is for all short-term disability, but it also is what it looks like for the leave process as well. So in the event that you need to file a claim or a paid family leave, you just call you call the County of San Diego's intake line, and a Lincoln representative will help get that claim or leave set up. And then you will be assigned a case manager at Lincoln who will be your single point of contact to help answer all of your questions as you are taking time for your claim or your leave. They will be the person who will be working with your physician and helping to get that medical documentation needed to support your claim or your leave. That individual is also responsible for making sure the systems are updated and all the proper notifications are going out regarding the status of your claim or leave, as well as your return to work plan. So just wanting to show essentially that regardless of whether it's for a claim or a leave, the process is the same. And if it happens to be related to a pregnancy and you're going to be filing both short-term disability claim and a bonding leave through PFL, you do not need to make two separate calls. That is one call that needs to be made, and you will just work with your case manager to talk through what's needed for that one absence. So here is a PFL example to care for a family member. Again, only available to those who are electing one of those 3 short-term disability plans for employees who do not pay into the California State Disability Insurance. And here's where you can use up to 8 weeks of PFL to care for a family member within 12 months. And that could be for one single qualifying event or for multiple qualifying event. Just keep in mind that 8 weeks is the maximum that can be used within those 12 months. You could also take that time in one continuous leave or intermittently. So if you wanted to take it in smaller increments, that's absolutely available. And as I mentioned before, the qualifying event must occur on or after your initial coverage effective date. I'm going to go into, oh, Crystal, was there a question?
No questions in the chat
okay.
at this time.
I was going to go into just a little bit deeper on pregnancy claims and bonding leaves because these can get a little bit confusing. As I mentioned before, you know, when you're initiating a claim or a leave, the only time you're going to be doing both at the same time is really due to these pregnancy claims. So when a person is submitting a pregnancy claim, your case manager or your claim specialist will automatically start asking you questions about the bonding. And if you intend to take that bonding time available as soon as your short-term disability claim ends, or if you plan on taking it later, if you want to take it intermittently, all of those things. So they will be the one to help talk you through what your options are for your bonding leave. You don't need to file a separate bonding leave if you are going out due to a pregnancy. One thing to keep in mind, I mentioned before that for short-term disability, a pregnancy may be considered a pre-existing condition depending on when the claim's filed. So it may be considered a pre-existing condition for a short-term disability. However, there is no pre-ex limit on PFL, so you may still be eligible for the paid family leave bonding time. Even if the disability claim itself is excluded due to it being a pre-existing condition. Here you see there's 3 different examples that we're going to go through for each of the short-term disability plan. These are all pregnancy examples, so you can see how the pregnancy claim would be handled and the PFL portion of it. So for the 3-week short-term disability plan option, benefits will pay for 2 weeks. So there is a 3-week plan duration. However, the first week is unpaid. So after the 3rd week, short-term disability would no longer be payable. However, the paid family leave for bonding could begin as soon as that ends. This is regardless of the delivery type. So whether it's a vaginal delivery, C-section delivery, with or without complications, the maximum duration for the 3-week option is 3 weeks. So after the 3rd week, benefits are no longer payable. However, those 8 weeks are still available. For the second example, with the 7-week short-term disability plan maximum, you can see where those 8 weeks are still available for the paid family leave. However, the short-term disability for the pregnancy is a little bit different. So a couple of things to keep in mind, even though you've elected the 7-week maximum duration, pregnancies typically are only approved for 6 weeks due to a vaginal delivery, or 8 weeks if it's a C-section. So knowing that that elimination period is unpaid for the first week, for a vaginal delivery, benefits would not be payable after 6 weeks, again, assuming this is a typical recovery. And in the event of a C-section, the benefit would not be payable after 7 weeks because of that plan maximum. So that can get a little bit confusing. I just wanted to have it here in an example so that you can see what that looks like. Now for the 12-week short-term disability, again, because there's typically a 6-week a 6-week recovery time for a normal delivery and an 8-week recovery time for a C-section, your benefits would be payable up to the 6th week, or for up to the 6th week for a typical delivery, or up to the 8 weeks for a C-section delivery. Again, regardless of the 3, 6, or 12-week duration for the short-term disability, those 8 weeks of paid family leave are still available for bonding. So just wanting to show that. I know that was a little confusing. I wanted to show what those 3 scenarios look like, depending on the plan maximum elected. So I'm going to stop here and see if there's any questions around the paid family leave.
We do have a question here. It reads, if you take 8 weeks PFL intermittently, is there a time frame it must be used within? Example, 1 year from birth.
Yes, 12 months from birth. It needs to be taken.
That was the only question in the chat as of right now.
Great. Okay, I'll open it up for general questions. Okay.
Well,
There are
Marianne, it
no
looks like no. Sorry for all speaking. Looks like no other questions are coming through.
Good, good. Well, as I mentioned before, if any questions come up after we are done today, please let your benefits team know. They are great about reaching out to me and getting those answers for you between now and the end of the enrollment season.
Great. Thank you so much, Marianne, for making time and for the great presentation. And thank you, everyone, for joining us today. This does conclude our webinar. I hope everyone has a great day.
Thank you.